Good evening, everyone. This is Wayne, and this is the video version of the trade report for Tuesday, February 13th, 2018. Well, the markets closed higher yet again today, and they traded in a relatively tight range, but volatility persisted. What will tomorrow bring, and will the CPI number that reports before the market give us more upside or revert us back to the downtrend that we've seen over the last week? Stay tuned. Greetings, everyone, and before we get started today, I just want to say a big thank you to all of you who spend your time every day watching this video and hopefully getting some value and potentially a little bit of entertainment out of my relating of the market details. Anyway, I wanted to be sure that I said thank you very much, so let's get started. By now you all are very familiar with this chart. This is the S&P futures. This is the 24/7, not really 24/5, market that trades globally. It is the overnight market, it's the extended session, it's the pre-market, and it's the market that I pay the most close attention to. Now, I like to look at the S&P 500 for reasons I gave yesterday, but just for the purposes of reiterating and supporting what I said yesterday, I like to look at the S&P 500 because it's the most representative of a cross-section of the market, and because it has 500 of the largest cap stocks in it, it also provides a decent underlying dynamic for what goes on in the market. Granted, there's always some outlying situations and circumstances associated with different stocks and ETFs and commodities, but the S&P 500 is really the core of the financial markets. All right, enough of that. So in the gray area, this point to this point, that is the extended session. And you can see that it extends from one end to the other in between this white area, which is the regular session. So what I do is I watch the market as long as I possibly can overnight until I go to sleep. And then I wake up in the morning and I see what the market has done overnight, and I formulate my game plan for the day ahead. Now, I normally get up about 3 to 4 o'clock in the morning, Pacific Standard Time. And that puts me right about, looking at the point in time in the market when I'm usually watching this thing. Yes, it was right about here, actually. Right in this area right here is when I woke up this morning. Now, what I saw when I woke up was a market that was trading pretty deep to the downside. And I thought to myself, okay, here we go. Now we're going to get a down day. And then I saw something which is part of a technical indicator I use called the Ichimoku cloud. Yes, I'll say that again. Ichimoku cloud. It's a Japanese indicator, and it's an extremely powerful indicator that provides a number of different dynamics that I pay attention to get a sense of what the market is going to do. And I saw this area right here that I call a pinch. And why do I call it a pinch? Because it narrows and transitions from one type of cloud to the next. There are a number of different names for this area. Some people call it a twist. Some people call it a center. I call it a pinch. That just works for me. And what I have found is when price begins moving toward a pinch, it is magnetically attracted to that pinch. And sure enough, as the pinch approached, price began to move higher toward the pinch. Now, I like to say that price moves toward, to, or through the pinch. In this case, it moved toward the pinch and then began backing off. Now, that's not necessarily bearish, but what it does mean is that the market didn't quite have enough upside energy to push price to and or through the pinch. So I'm looking for more downside at this point, given the fact that it's retracing. Now, the fact that we've got a red cloud, which is a bearish cloud, transitioning from a yellow cloud, which is a bullish cloud, tells me that we could potentially have even more downside. Now, this is all based on probabilities. There's nothing for sure that happens as it relates to any technical indicator. So what I was looking for as the market began to trade lower was for the market to go even lower. So when the market opened, we got a big back and forth that basically kept us in a very, very tight range in the first 15 minutes of trading. And then the same thing happened again in the next 15 minutes. Then we started moving higher, and we had another candle that looked exactly like the first two candles, only it closed higher than the first two candles. So at this point, we're trading higher than the opening of the day. Now, this very oppressive red cloud here was telling me that price was going to have to do a lot of work to go higher, but it started doing that work. It really started doing that work. And even with some movement to the downside, it persisted to do that work. And finally, when it broke out of the cloud, it really jettisoned to the upside. So we had some very oppressive price action today in the first third to half of the day that basically broke free. And we had a very nice move to the upside. As you can see, this is basically a next leg higher. And we did have a little relaxation in volatility, but volatility really didn't let loose. It really didn't react to that up move as if volatility was ready to just go away. So we still have a fair amount of volatility in this market, which tells me that we are still prone to get sold. Now, tomorrow morning, there's a very important economic data point called the CPI, Consumer Price Index. And the market is looking at that very, very closely. And if it's too overheated, which means that the interest rates will potentially rise sooner than expected as a result of that, then this market could see a little bit of this kind of action tomorrow. Now, coincidentally, what do you see here? Another pinch. So we're trading way up here in the extended session now, but in about 15, 20 minutes, no, I'm sorry, not that soon. In about, let me get the proper time. I was going to say in about 15 or 20 minutes. That is not accurate. In about 1 hour, this pinch will come into play, and we'll see if price is attracted to it. If price isn't attracted to it, that's very bullish. But if it is attracted to it, we need to view and measure the extent to which price is attracted to it. So we have this dynamic that we know to some degree what to expect. But if we don't get what we expect, or what the high probabilities are for price to move as it relates to this area, then we look to what follows this area. And what do we see? We see a bullish cloud that's reaching even higher. So if we get a non-movement or a minimal movement as we move past the pinch, I expect the market to either remain flat or go higher. But again, the mitigating factor is that CPI. So this is the market waiting for an economic data point that can absolutely take this market for a ride, either higher or lower. So we are literally hanging in the balance as I speak, as I record this video, and until 5:30 a.m. Pacific time tomorrow morning, which of course is 8:30 a.m. Eastern time. So we need to wait for another, another 14 hours before we really know what this market is going to do next. So until that time, we don't have a lot of information to go on. All we can really do is look at what happened in the overnight session, which we went lower, we went sideways, we went a little bit higher, tried to go lower, and ultimately made a very nice move to the upside. Now, a few stocks that helped that move were Amazon and Apple, and let's get my watch list over here. So we had Amazon up $28 today. We had BABA which is up $1.81. We had Caterpillar up $1.68. We had Microsoft up 70 cents, Netflix up 32 cents, Nvidia, nice day, up $4.60, PCLN, Priceline, up $7.86. Ralph Lauren is a stock that I track, and I have found that it behaves very well and has been behaving very well, especially in this very volatile environment. And Tesla had an extremely nice day today, up $7.93. And for some unknown reason, I honestly don't know why, but Twitter was up almost $2.50 today. Now, a couple of stocks that were a little rough around the edges. Facebook down $3.26, and Boeing actually ended the day down 64 cents after being up almost $4 today. Google ended up down 42 cents after being up about, I'm not sure, I can't remember exactly how far it was up, but it was up nicely. It was up at least $6. And then Home Depot, which is another stock that I follow very closely, was down 34 cents. Now you can see that a lot of these are Dow components, a lot of these are the NASDAQ components, but all of them reside in the S&P 500 as well. So this is my primary watch list, and you can also see that I follow the VIX. So the VIX is the measurement of market volatility, and the VIX went down 64 cents today. And I do want to show a chart of the VIX. So let's go ahead and get that put up here real quick, because the VIX is the VIX has been under scrutiny lately. Let's put it that way. There were several derivative instruments that had been formed based upon the VIX. And when we had this huge spike up to 50, in fact, it went up to 50.3, that basically completely destroyed those derivative instruments that had been traded for years in this this otherwise very low volatility environment. And as such, many hedge funds and individual traders such as myself lost vast sums of money as a result of having very large positions. I didn't have a large position myself. I did have a position, so I did have a loss, but I kept it manageable and small. And you never want to lose money in the market, but when you have such an anomalous one-off kind of situation, it really kind of hits you upside the head, so to speak. But suffice it to say that this market has now changed. It is no longer going to be the same as it was before this happened, because so many funds went out of business because of this destruction of these derivative instruments. It's been a real big shakeup. And for anyone who's been following the market relatively closely, it's really been one of the main news drivers as to the reason for why the market has gone up as much as has gone down as much as it has, and why volatility went up as high as it did. So bottom line is, we had this huge spike in volatility, then it came down, and now we've been kind of getting little spikes and drops, but predominantly we are heading a little bit lower here now. So we still have this kind of action going on. And I mean, we do have that CPI number tomorrow morning. But if we look at the VIX, we're looking at a market that looks like it's beginning to calm down. And with that leg higher today, and with a little bit of relaxation in the VIX, we're looking at the market potentially starting to move higher from here. Now, I mean, it's not just going to go up from here. And to look for the type of market movement that we had in January going forward this year, don't think that's going to happen. We're not just going to get that straight up move that we had in January. So if we take a look at this chart here, we can see that this action starting, let me get that, yeah, right here. This was the first trading day of January, right here, and we literally went straight up. Now, that does provide a very convenient reference point for how I measure these markets from the standpoint of the Fibonacci analysis I do. So what I do is I take the most recent swing low of a big move, and I measure it to the top of that move, and that's where I get these support and resistance levels and these targets, these areas right here. The math and the math and the figuring processes associated with this program are really incomparable. It's a fantastic charting program. But the main level that I'm looking at now, this is the S&P cash, remember, it's not the S&P futures. So there's a little differentiation there. In fact, if we take a look at what's going on here, the S&P futures are currently trading up 2 points at 2663, and the S&P futures closed up 694 at 2662. So they're kind of in parity right now, but when you measure the levels, there is going to be a little bit of a difference because there's never a perfect matchup between the two, because the futures trade overnight, the S&P cash trades during the US regular session and then closes for the overnight and extended session. So in this particular case, I'm looking at the 2773 level for price to get above, and then ideally get above this trend line that we talked about yesterday, this downtrend line. And once price gets above that trend line, I think we can start talking about the market going higher consistently. But until that time, we're in a very precarious place. So I do want to take one more measurement here that will potentially, now I may have done this yesterday, it looks like I might have done that. Go like this, and I did. Okay, so that's this level right here, this red line that I just drew a line through. That's the 100% symmetry resistance. And that's a 2727. Oh yes, I remember. I talked about that last night because the reason I talked about it is because of this confluence right here of the downtrend line and the 100% symmetry resistance. So if price can move up into that and through that, it has accomplished an enormous amount. So we'll see if that happens. That's a lot of resistance, but this market is also a very powerful bull market. We'll see what happens. And yes, I know that we've gone through an enormous amount of tumult and volatility, and the market has just been all over the place, and it's been virtually impossible to trade. And so much has caused fear and anxiety and gotten people all excited and frustrated as a result of these crazy market moves that are historical in nature. But we always seem to recover from these, especially if it's not something fundamental in nature that's causing the issue. And the economy is strong, but interest rates, which are purported to rise this year at least 3 times and possibly 4, and that's the Fed coming out and talking to us about that. For every 1 point of interest rate, so if the Fed came out tomorrow and said we're raising interest rates 100 basis points, which is 1%, that would basically create a 16% adjustment in the earnings associated with the S&P 500. 16%. So that's why interest rates are so incredibly important to the market to evaluate where they're at any point in time. So we just heard a little bit of an alert, and that alert is telling us that the market is going up a little higher here. So that's interesting in and of itself. And if we look at VIX futures, the VIX futures are trading down 5.5 cents. So we're actually below 20 on the VIX futures. We just changed the VIX futures contract, which I won't get into, but suffice it to say that the VIX futures are very much like options, and options contracts expire and then they move to the next contract, and that's what futures do as well. So enough said about that. So at any rate, what we have is a market that looks like it wants to go higher. It's moving a little bit higher in the extended session, and we have a pinch coming up, which may or may not draw price to it. We have a CPI number tomorrow morning. We have a number of different variables that are still very active in this market, and we just need to take it a day at a time. So with that, I would like to wish you all good night and good trading.